My name is Robert Doak. I'm an international trade advisor with UK Invest, and I've been working with them now for, I guess, about 8-9 years. Previous to that, I was an export manager in various types of businesses, both service organizations and product companies. So one way or another, as you can see the color of my hair, I've been around a good few years. It's probably about 30 years of professional activity in international markets. The aim of this presentation, as much as anything, is to hand over some tips and some simple tools that you can all take away with you about managing risk. Managing risk in export markets is, to my mind, a big thing, as I will enlarge upon in a minute. And, you know, even the biggest companies get it wrong. I'm going to quote somebody that's in the public domain and that you all know about, that I know about because I work with them quite a bit, and that's a company called Tesco. And they went into the States and they gave it a good bash. They did a lot of due diligence, but they still got bits and pieces wrong, critical bits and pieces that eventually cost them dear. Cost them dear in terms of direct, and this lesson applies to you all really, or all exporting businesses. Firstly, the direct costs in their case were 641 million. And secondly, the indirect costs were their brand. And in their case, this cost them shareholder value and all kinds of things like that, which may not apply to you guys, because I'm assuming that many of you here are either in small organizations that are considering exporting or exporting already, or quite small firms. But nonetheless, the lessons apply. And this whole business of market entry is a critical thing to try and get right, to try and reduce the risk. I think that's self-explanatory. The bit I haven't enlarged upon very much is developing international opportunities, because my view is that when people do robust due diligence on market entry, it makes them increasingly attractive to the stakeholders and the customers that they will meet overseas, because they have a kind of an openness to learn, and they don't have that kind of, dare I say it, classic British arrogance which says, well, come on guys, it must be a bit like trading in Britain. But that kind of openness, that kind of warm smile and you tell us what you want, that makes them find you much more attractive. And when you're attractive, so do business opportunities open up. And I would urge you to see the two things of managing risk and developing opportunities as being hand in hand. Just in case, and maybe we need to do a straw poll in a second to know exactly where you're all coming from, but just in case anybody is under illusion about the value of exports, this slide tries to kind of simplify on that. It certainly potentially does improve your growth, and I'm just talking to a gentleman here who tells me he gets, and it's a very small company, and he tells me he gets about 25% of his turnover from export markets. And I would say that's kind of typical for how very small businesses do grow. So if you think whatever your turnover at the moment, and then you start to add 10 or 20% to it over the next couple of years, that's a very good area to grow your business. Equally, when you've got your eggs in a number of baskets, market baskets around the world, as the various baskets fall away, and sure as heck they will, so that you've got alternatives to fall back on. And sometimes it's the British market that falls away. And then you've got eggs in a basket in a market overseas. And last but not least, there's something about exporting that somehow improves the capacity of your company. I think whether you're a one-man band or whether you're a an SME with about 20, 30 people in, or whether you're a very large business. Something about aspiring to internationalize not only builds your opportunities, but equally gets everybody excited. This is on the assumption that you're getting it right. So why is export potentially risky? I'm not going to go through all of this, but essentially it's all to do with the fact that it's the degree of newness and unknown factors. Now, you might say, well, we export into Ireland, there's nothing very new about that. And we find that a lot of the customers there, they speak English, they are aligned to British culture. What's new about Ireland? Well, and you might say we also export into Australia, New Zealand, South Africa. Nothing new about these markets. The cultural differences aren't that great. The way of doing business is pretty similar. So what's the difference? What's the risk? And you're dead right. Those kind of markets are fairly low risk. And if you look at where even some of the biggest companies start, they start exporting in Ireland and they build up their know-how and their experience and their skills and their management processes. And then they transfer that into slightly more challenging markets, say Western Europe or South Africa or Oz, New Zealand. And so they move on into the more challenging markets. I mentioned Tesco earlier on. I hope you don't mind me using one of the biggest companies in the UK as an example, but they're a classic. They started exporting in Ireland about 15 years ago. And then they moved from there to Western Europe and then to Central Europe. And so they moved on, going east across the world. And they're now in about 18 markets worldwide. But they are classic of how somebody builds up their competencies to start to understand risk, working in the easy markets to start with, and then moving east. Now, that's great, but unfortunately the world's a very fast-moving place in this day and age. And one of the things I've spotted is how quickly internationalization is moving for quite small businesses. Hope you don't mind me talking about your very brief case history. Gentleman here gave me a quick pen picture of his company. But from what he was saying was that he has built up his business, not only 25% exports, but moving into quite a number of challenging markets around the world increasingly. A very good example of a small business diversifying into exports, slowly moving from the safe markets into the more challenging ones. Now, I know because I advise a lot of businesses and I work with UK Trade Invest. I know where tomorrow's opportunities are. And where are they? They're not in Western Europe. They're not in Ireland, unfortunately. They're not in Eastern Europe. They're probably less so in the Middle East even. Where are they? They're in Sub-Sahara, Latin America, and Southeast Asia, the area we call the ASEAN group, which is Burma, Thailand, Malaysia, Singapore, moving up around Vietnam, up towards Taiwan. Those are all where tomorrow's opportunities lie, and those are all high risk. And they're high risk because of the factors that are pretty much on this slide. Sorry, I just need to explain one small thing. PES stands for politics, economics, social, and technology. And if you go to Vietnam, which is a high growth market, up and coming, double-digit growth economically, lots of assets, still communist, but moving very steadily into Western culture. Their pest analysis will be very different to what you would experience in the UK. Their method of doing business, their laws will all be different. These are the reasons why, which underpins the story I have to tell you today, why it's important to consider how you go about managing risk. And just to follow on from that, these are the essential ingredients I would expect to see in any kind of export strategy, whether you're a one-man band or whether you're a Tesco, quite frankly. These are the key elements I would want to start to see. Now, it doesn't have to be I mean, for a Tesco, it's going to be very elaborate. For a one-man band, it's going to be sketchy and very simple. But nonetheless, as an advisor for UKTI, I would expect to start to see and encourage to see this kind of ingredients in consideration. I would expect you to start to understand the political, economic, social, technological differences between the UK and the market you're targeting. I would expect you to understand how your value proposition, your product or services is going to meet the needs of this country. I would expect you to know where you are on a supply chain, who your customers are, who your competitors are, how you're going to get goods in there, where you are on the value, who are your customers, who are the customers of your customers. And I can go down through this list. Perhaps last but not least, I'd also expect some sort of basic business plan. I talked about cash flow. One of the biggest problems affecting, in my opinion at least, affecting small to medium-sized businesses, small firms, is the fact that they lack two big resources. One is people. Again, I'm sorry, I'm going to go back to you time and time again on our case history. A one-man band and his wife. And when he goes overseas, my question will be, who looks after your business? The other big issue is usually not very deep pockets. Cash flow is normally a big problem. And unfortunately, export is all money up front. You got to put money into a website, you got to do market visits, you get long, cogitated conversations with customers in different languages. You've got to adapt your product a little bit to regulatory environments. There's all kinds of things to do. It's all money up front. It's not like just selling something to a customer up the road. It takes 18 months or more sometimes before you get a sale in the export market. That's all investment. So cash flow can be a real big problem. And the last thing on any of this is, what happens if it goes wrong? What's going to cost me to get out? All of these things are major considerations and need to be in your mind at least, or on a checklist when you're starting to put together risk. And you don't have to worry about taking too many notes, because I'm going to try and make sure that these slides are available somehow. Okay, so where can we start? Now, acknowledging you're all small firms, and I don't know whether you are, let's just take a quick straw poll. How many companies or people in this room represent organizations more than 50 people? 1. 2. Are you big organizations? No. Okay, you don't go much above the 50, so you're still SME. Right, so you're big. Right, okay. This still applies, though, because I think this is a really good place to start when you're considering export. Get your management team, it might be your wife or your husband, whoever it is, or whether it's a small team, or put them around a table, a laptop, that's plugged into the internet, and a few bits of paper, and draw a SWOT. Strengths, weaknesses, opportunities, and threats. The strengths and the weaknesses are all about how you are well placed for this export market and for this group of customers. And the weaknesses are all about you as an organization internally, how you're not well placed. And ignore, doesn't work. Ignore the opportunities and the threats at the moment. Just concentrate on the strengths and the weaknesses. What do you know about the customers and the markets that make you feel very bullish and strong about, and what you feel about the weaknesses are. Now, the opportunities and the threats you may not know very much about, because you may say, well, I've never actually exported into Vietnam before, so I don't really know. Well, all I would suggest is go Google, and there's lots of places you can get information on any market, pretty much anywhere in the world that you guys would be exporting into, and start to look at how that market aligns to your strengths and weaknesses. This is a very simple exercise, and it can be done in a couple of hours, either in one hit or several hits. But It's so simple and it's very low cost. And it's the first stage at you assessing risk. And what will come out of this exercise is a number of things. One, it will give you a decision as to whether we want to say, actually, let's not do this. You know, we don't have the cash, we don't have the resources, it's a very challenging market, we don't know very much about the customers, let's choose something a wee bit easier. It might give you that information, and that's good, because it hasn't cost you more than a couple of hours around a coffee table. Or it might say, let's move on. It's given us a number of questions that we need addressing, but we feel pretty good, and we've got some knowledge about the opportunities, and we've got a little tiny bit of knowledge about the threats. Even if these are second guesses, we can move on to the next stage. The next stage, this is my own tool. This is my funnel diagram. It takes you from a SWOT into something that's slightly more formal. And the way it works is this. Draw yourself a funnel diagram and think at the top of the funnel, what are the broad issues of feasibility are there to engage in this target market? Let's do a fairly speculative assessment. Let's take some of the stuff that we got out of the SWOT and let's start to investigate a bit more. Maybe we go and have a word with UKTI, it's all free. Maybe we go and see our Chamber of Commerce. If you're a member, I guess you can have a meeting. Or maybe we know somebody who's been to this market before or knows these customers or whatever. And you start to get a touch and feel at how it might work. And out of this comes a series of questions that encourage you to say, right, next thing we need to do is to go and visit this market. And we need some help from UKTI to arrange a few visits to tentative customers and stakeholders. And we want to go and have a look at this market to get some touch and feel. And we might do an exhibition out there, or we might just visit an exhibition. And the point I'm making here is you've moved from a SWOT to the first level of feasibility, which will give you some indication. And on the strength of that, you either get out and look somewhere else, or you go and do a market visit. And the market visit will give you a bit more intelligence and a bit more strength and feel. And what's happening here is you're moving down this funnel, and every time you move to a slightly more in-depth level of investigation, so you're investing a bit more, but you're doing it on the back of a bit of intelligence. You're not just doing it as a speculative shot in the dark. And believe you me, the number of small and quite large firms who I see engaging with customers overseas in a totally unqualified manner, because they've not even done this first level of assessment. They've not got any indication at all of their ability to meet the needs of the marketplace or the customers. And what I'm saying here is, as you go down through this funnel, so you're investing more and more, but doing it on the back of confidence and increasingly known factors. And of course, as you can see from this diagram, so you're going down the funnel, and the next stage on is to start building the business case. And you're then moving from, by this stage, you will have surely met your customers, met your distributors, done some analysis, got some fine figures. Maybe it's only fag packet stuff, but at least you're starting to understand how much it's going to cost you, what are the pinch points, where are the real challenges, how good are the customers, do we need to do some proper research on these people, etc., etc. And not wishing to procrastinate, but as we're going down the final stage is what we would call complete due diligence. And I'll expand on all of this in a moment. And complete due diligence really is that you've answered pretty much all the questions about that marketplace and the customers and the competitors and all of the things that may be a threat to you, but all of the things that equally will be an opportunity to you. And not only have you got full-blown confidence, but you've got a complete business plan. So by the time you actually sign a piece of paper and commit to something, you are fully up to speed with having addressed all of the questions. And the next stage is, of course, well, I don't know what questions I should be asking here. And this slide aims to look at some typical questions for the various three, I've called them 3 stages. The first stage, don't know if this is going to show, no it's not. The first stage in your top right hand corner is the initial indication. You can get this intelligence for free, usually off the web. You might get it through a market visit. You'll certainly get it by speaking to UKTI for nothing. But these are the kind of early indicators. These are the kind of questions that you should be asking and that you're trying to answer. And as we get across into the one on, yes, your right side, these are qualification questions. These are the ones that are taking you further down the funnel, where you're getting some quite clear indicators of the strength of the business opportunity and the kind of risks and the kind of money you're going to make out of it. Things like tariffs, duties, freighting arrangements. That will start to give you a very strong indicator of what your final return on investment is likely to be. And then, of course, as we move across to the final slide, final box, here on, yes, your left-hand side, then we're getting into very, very detailed questions indeed. And some people don't even bother with these kinds of questions, but I would always urge you to, because this is where people tend to make the mistake. Product liability and warranty claims when it goes wrong, workable credit arrangements, stuff of that kind. Now, hopefully, that's a pretty easy to take away process, something that anybody can do pretty much on the back of a fag packet and a few market visits. It aims to be a process to reduce risk and speculation. Now, I've talked about a lot about managing risk, and I've given you a few tools to do it. But what about maximizing the opportunities? Again, I do work with a lot of large businesses, not always as big as Tesco, but I do work a lot with businesses, not just at the small end or the micros, but I do work with a lot of businesses who are typically £100 million turnover. And I'm always amazed at when I see the mistakes being made in this kind of area, where they are ignoring the opportunities to build further business. For example, I do actually go and talk to professional marketeers who have got lots of dirt underneath their fingernails with export trade, and they don't understand the big picture in certain markets. By the big picture, I'm talking about the political, the economic, the social context. They can't articulate for me why their products are successful or not successful. And by the detailed picture, I'm talking about, well, I'll give you an example. I went to see a £100 million client of mine a couple of weeks ago, and I will tell you no more. But I said, when was the last time you went to see your distributors in Russia? We've not actually ever met them. Well, how do you know how good they are? Well, we get plenty of money back from them. How do you know they're going to carry on doing that? Well, we don't know. How do you know they're maximising the possibilities for you? Well, we don't. And I did. This was a seasoned export manager. I didn't need to say anything more. He said, "Robert, thanks for that. We'll on a plane to Russia next week." But these are the factors that not only help you manage risk, but they help you manage opportunities as well. I did say right at the start, opportunities go hand in hand with risk. Okay, sorry, have I missed a slide? Right, oops, sorry. I've covered the kind of key messages that I wanted to present to you in this 25 minutes. Just before we close, just a bit about UK Trade Invest. I don't know how much you know about us, but we are a government body who employs non-government people. I did say right at the start, I come from a commercial background. I joined UKTI because UKTI likes to employ people like me who've been around a bit and then going to spend their last years of their careers advising other businesses how to do it and encourage them to do things properly. And we've got a big organisation to help you do this. We're like an iceberg in a sense. We're like, the bit you see above the water is the bit in the UK, which is not very big. It's about 300 people and mostly offices in London and trade centres around the UK. Underneath it all, we've got about 2,000 personnel and 120 offices in virtually every market, embassy, consulate around the world where there's an interest for UK PLC. So if you're in Saudi Arabia, in Riyadh or Eastern Province, nothing's stopping you from knocking on the door of the British consulate and going in and say, I'd like a word, if I might, half an hour. They'd be very happy to see you. But we've got all of these services that can provide support, and we are particularly focused on supporting micro and small businesses. And I'm not going to go through this lot, I don't have time. But if you want to engage with us, there will be a local office near you. We have 9 offices throughout the English regions. We've got a team in Scotland, we've got a team in Northern Ireland, we've got a team in Wales. We've got about 300 advisors in those offices. People like myself who've been around the block and very happy to come and give you free advice and support and introduce you to our resources and our support mechanisms. And whoever you are, big business or small business, whatever sector you are, education, oil and gas, whatever it is, we have the expertise to give you that support.